Well, that didn't work out. There we go. That's better. What's going on, everybody? Chris Franks with Texas West Capital coming at y'all live here. What is it? Just after 11 a.m. Central Standard Time on Friday, the 25th of October, 2024. By the way, before we get going here, do me a favor. It's not what you think. Quick shout out to my sister and my father, both. They have their birthday today, born 25 years apart. So kind of cool. But if you wouldn't mind, say happy birthday to them, and that way I can let them know that y'all are thinking about them, even if you weren't until just now. Anyway, other than that, hit the thumbs up, hit the like, subscribe to the channel, follow me on Twitter and all that other great places, wherever you may be, Twitch, Facebook, YouTube, whatever, guys. Because, again, at the end of the day, what I do here is I bring you a lot of information, right? And I bring you a lot of charts. And what I try and do is I try to make the market more understandable because there's so much noise out there that y'all have to deal with. And the newer you are, the more difficult it is to navigate the noise. And there is a lot of noise. Honestly, I can't even imagine trying to start trading today with access to social media and everything else that we're all like sitting on our phones all day long with. Again, I started 30 years ago this year. So before, this big push with the internet, before the AOL, those of you that are old enough to remember what really kicked off everybody getting on the internet, AOL's unlimited data plan. Y'all can still, when I say that, you can hear the modem going off in your head, can't you? But anyway, so today we're going to talk about a few charts, guys. We're going to talk about Tesla. We're going to talk about Save, which is Spirit Airlines. We're going to talk about Bitcoin, as always. We'll take a look at the major stock indexes. We'll take a look at gold and silver and the DXY. Oh my gosh, I'll make sure what else I can get in here. I think we'll take a look at MicroStrategy. Yeah. And we're going to do all this in about an hour after the show today, guys. I'm going to jump on with Mr. Gary Cardone over in his Cardone Corner. If you guys want to transfer over there after this, it's youtube.com/Gary Cardone. He's got a live that's actually going on right now, but his should last a little bit longer than that hour. So I'll pop in over there and have a discussion with him and Samuel as well. So there you go. Okay. Mark says, Mark, you aren't old enough to remember. He says, I remember that. Michael Johnson says, and then Mark says, then all of a sudden someone in your house makes a phone call and you're lost. I believe Michael remembers that. I don't believe Mark remembers that. Anyway, yeah, MSTU parabolic 2X monster. I always say monster every time I see MSTR, MicroStrategy. Yeah. Real quick, guys, Microsoft, right? So we're all kind of seeing this thing going around about Microsoft. I even reposted it as well. Make sure you understand what's going on. They're voting for this, basically to have Microsoft look into adding Bitcoin, right? Microsoft says vote against it because, hey, we're already looking at it. But the important thing to understand from this is the shareholders stepping up and saying, hey, listen, we want this. That's the really important thing there, guys, okay? Everything else aside, whether it gets done or not, or, Microsoft says, oh, we've already been considered, we already watch it, blah, blah, blah. This is the shareholders coming up, right? This is what we keep talking about. As Bitcoin becomes more widespread and more, again, guys, if you've been in the space for a few years, it feels like everybody should know about Bitcoin, right? Because you're in social media, you hear about it all day, every day. You follow me, I talk about it daily. It seems like everybody should know about it. But the reality of it is a great swath of the planet really doesn't know about it yet. And of those that do, a lot of them still really aren't all that interested or don't really know enough about it. So when you start seeing things like the shareholders come up and say, hey, listen, we want you to, we want to vote on this and this, it's a good thing, guys. So beyond that, we also have the ETFs, they're just banging along, just absolutely huge. The inflows here the last few weeks have really ramped up, kind of rivaling what they did at the open when they were first approved. So there's another good thing there. So a lot of good stuff, guys, going on. Okay. What'd you say, Bernardo? I used to watch my brother play Duke Nukem with dial-up. Man, I have not thought about that game until you just mentioned it. Yes, I remember doing that. Crypto Ray, what's going on? It says NVIDIA just flipped Apple. Yeah, not surprising at all, right? NVIDIA, interestingly, is cheaper right now than it was at the same price. It's cheaper to hold on a forward-looking basis than it was months ago, months ago when it was about the all-time high. Had just passed up when it hit that. So, NVIDIA continues to just kind of rake in the money as well, right? There's a few of them that continue to do it. By the way, if you're not watching Apple, you should be watching Apple. They're butting right up against the all-time high. They pulled back just recently, but man, they should be breaking up along, okay? I'll go way back for you, says Randall Dance. How about the game in television from about 1974-ish? Well, okay, so 1974, you were getting pretty far back there. I remember playing Atari back in the late 70s and whooping up on my dad on it as a child, and he wasn't too happy about that. I remember playing Pong with a little paddle controller. So that's how old I am. I remember that going back that far. Y'all are a trip talking about this. I still have in my head, I still have that stupid modem right now going off. Ever since I said the word modem, I've got that, that 33 baud kind of thing going off in my head there. Bernardo, yes, I saw your question there, and I responded to you. I replied back to you. Send me a DM on the platform, buddy. Okay. You'll see if you go back to the chat area there, my name's there. And I said, send me a chat. Click on my name. Just send me a chat there. We'll get you sorted, bud. Okay. Let me see here. Let me see here. By the way, oh yeah, that's a great thing here. Real quick, guys, before we jump into the charts, we're launching the new group coaching today. So if you're not on the list, you can go ahead and get on the list and still get in that founder's price. It's $77 a month, guys. Absolutely insane. Ask anybody that's in it. They've had to pay thousands of dollars a year for years now. Okay, we've never done this, but we're going to do it like this for the first 500 or so that sign up. They're going to get it at $77 a month. It gets all our group coaching. I'm going to tell you guys, there is no greater comprehensive trading education anywhere online. Nobody else is really going to teach you to the extent of what we do, how and why markets move the way they do, so you actually understand it. They're not going to teach you price forecasting like we do. And so we've got all that, right? That's all the group coaching. You also get access to the TWC Traders Club, which by itself is $50 a month. Okay. And that gets access to my daily, updated analysis throughout the day, my trades, Vince's trades, Andrew's trades, Fibaswani's trades, right? These are our head traders. You get all of that. You also, I just talked Fibaswani into this. He's going to also provide access to his threshold theory group, where you can learn his threshold theory, his proprietary trading system, and be a member of that group as well. That's normally $34 a month. So absolutely crazy here. If you were to do his group and the Traders Club alone, that's already $84 a month. If you're one of the, if there's still, I think there's still a few spaces left. If you're one of the first 500 to sign up, and you can do so at texaswestcapital.com/97GC. Let me put it on here for you on the screen. Okay. If you sign up there, I'm going to send out emails today. We're going live with this today. I'll send out emails with the link to get the $77 per month. Okay. And that will remain as long as you remain a member. Now, if you decide you're not going to pay 1 month, you lose that founder's price. Okay. It's got to be while you remain a member. As long as you do, you get it for $77 a month. And again, that's also all our group coaching that we've been charging $39.97, $3,997 a year for. Okay. So you get all that. You can jump on that. We're going to launch that today. If you're not one of the first 500 to sign up on that list and do that, you're going to pay $97 a month. But again, $97 a month is insane for everything you're getting, guys. I'm telling you. Look at this. I don't have to tell you here. Look, Sats McGee's been with us a few years. Look at this, at least. Group coaching is the best. He says you'll easily make your money back. Michael here as well. Lots to learn. We'll keep you busy for months to come and more coming. We've got more coming, guys. Always, okay? Let me see here. Oh, there's Mr. Andrew Bennett already. Look at this is one of our lead traders, one of our head traders over there. He's one of the guys that post trades and analysis throughout the day for y'all as well in the Traders Club. Nathan's asking, a month or do you pay for the year? We've got both options. I wasn't going to do the yearly because the price is so crazy as it is, but you can pay for a monthly, or if you pay for a year, you get 2 months free. So you get stupid crazy deal anyway, and you get 2 months free on a year. So you're just paying for 10 months on a year. It's just absolutely insane, guys, okay? Miss Westbrook here, look at this. Making money weekly with what I've learned at TWC. I love it. Thank you so much for chiming in, guys. I really appreciate it because, again, I can tell all day long that what we do really can change your life as far as trading goes. But, again, I'm the founder. I'm the owner. People be like, oh, you're just trying to push it. A lot of people don't know me yet. But when y'all are in there and you're telling people, hey, listen, it's legit, that helps out a bit. So anyway, yeah. So, hey, guys, lots of stuff going on here. Just getting this going, right? Let's go ahead and jump into it because we're got a little bit shortened one today, so I can jump on with Mr. Cardone here afterward. Let me see. Oh, real quick here. Data's in with us as well. He says, Andrew is so damn quick. His trades are loading faster than the chart itself within my browser. TWC was the best thing ever stumbled upon in my life. I appreciate you, buddy. Thank you for saying so. Mark as well. Mark, hey, by the way, if you guys get in there, man, say hi to Mark. He is our resident comedian from Canada. Great guy, absolute great guy. He says a lot of funny things. So, okay, let's see here. Oh, one more thing here. Guys, you guys are just really talking up. I appreciate this. Bamboo's been with us for years as well. Says it's not a group for trading, but more like an institution for learning and knowledge. I mean, this is what it is, guys. I love that people feel this way because at the end of the day, I could just trade and that'd be it. But again, I tell you, I don't believe in altruism. I believe we all do things for some reason within us. And so I don't do it just because, to make your life better. I do it because when you say things like this, when it's made this kind of impact on you, it makes me feel good. It really does. And that's why I do it. Okay. So you get the benefit of actually getting something positive out of it, but I'm not going to lie. I do it because it makes me feel good. So if it wasn't, there'd be no reason to do it. Right. The members are really great. They definitely are. God, I love it. Okay, guys, let's go in here. Let's jump to the charts. Y'all ready to do this? Okay, anyway, look at that. Everybody loving it, man. This is great people here, man. I love the energy today. I feel good. Do y'all feel good? Do y'all feel good today? Because I feel good. I had absolutely the worst headache yesterday. Oh, man, it was so bad. Ended up making it through the day, though. Did everything, taught the class on Thursday on Elliott Wave and everything. But, man, it was killing me. I feel so much better today. So you'll have to excuse me for a little bit here while I get this excitement out of me, okay? All right, let's jump on it here, guys. What do we got going on? Let's get this a little bit better looking here. There we go. I'm going to zoom in a bit here for you. So right now, we're looking at two possibilities here locally on Bitcoin, okay? Oh, let me see here. I just messed up my screen. Okay. So the first thing is we've potentially got a triangle going on. We've got 3 waves down. We've got 3 waves up. Potentially 3 waves down for a wave C here. Then we'll look for 3 waves up where wave D will close below wave B here. And then 3 waves down where wave E closes above wave C. This is initially what I'm looking at the moment here. Okay. Now there's a possibility that wave B could actually be done here. And we've got a leading diagonal playing here. So we go 1, 2, 3, 4, and then we'll get a 5. I don't necessarily think that's what's going on at the moment, but if we break out above this swing high here, this is the swing high on yesterday, on this Bitcoin all-time index chart, that's 68,810.05. If we kind of come from here and break out above there, that'll give us that 1, 2, 3, 4, potentially 5. It'll look like a leading diagonal. And that'll say, okay, well, wave B is actually done here. We're heading up, okay? But as long as we continue kind of this, we got an A, a B, the C coming down here, that'll give us a wave C, and then we'll continue looking at this triangle. In either case, our initial target to the upside is going to be around 72,250 based on the height of this pullback. Okay? So whether it's a triangle or whether this is leading diagonal, and if this is a leading diagonal, we'll probably actually get a higher target here. But just initially, our initial just a pattern-based target based on the pullback here, the height of this pullback, gives us that 72,250 area. Now, big picture here. All right? Remember, we're in bearish market structure coming off here. We got a high, low, lower high, lower low, lower high, lower low, lower high, lower low, right? So we have to break out above this swing high here. Just 1 penny. We don't have to close above it. It doesn't matter what time frame. We just need to get 1 penny above on this chart. It's $70,040.75. So we need to hit 76 cents. If we can do that, that's going to break this bearish market structure. And it's going to say we have bullish market structure now off this 49,000 swing low down here. Okay. We'll have a low, we'll have a high, higher low, higher high, higher low, higher high, potentially a higher low here, and a higher high breaking out above it. Okay. That's just basic general structure of the price action. All right. Now, there's a lot of people out there who are drawing this like this. Stop doing that nonsense. Stop drawing lines through wicks and whatever, okay? If you want to understand real support, real resistance, you have to utilize the wicks if they're there, okay? And in this case, there's a wick there. So we've kind of wicked out above it here, right? But we haven't really closed above it. We've just kind of wicked out above it. So as far as this descending resistance goes, until we're getting a close above it, I wouldn't consider it really broken. Okay. Let me see here. So this is kind of what and right now we're looking at, I've been looking at this, as you guys know, here is like an ABC, WXY, and then a potentially B as a triangle here and C with the move up, giving us this leading diagonal. All right. So that's what I'm looking at. Now, it's possible, I guess, that maybe this could be an A, a B, and a C, and so wave 3 could be up here. I don't think that's the way it is. I think it's more correct the way I've drawn it here, but we can, address that if it shows we need to as price continues up here. For right now, though, this does look like 3 here. This looks like, 5 up here. And then we get a triangle here, and then we get, expectation would be 5 more up toward this target. By the way, as far as Elliott wave goes, we talked about structure and bearish market structure and all that. This wave 4 that we're in here, okay? We have to break out above wave X, this wave X up here at 71,943 and 26 cents on this chart. It is the swing high on June 7th, okay, that area. We have to break out above that to add confidence to the idea that wave 4 is complete here and we're in wave 5 heading up, okay? Yeah, Bamboo, if you take a line chart, it's broken the resistance. I'm not a fan of line charts, guys. I'm going to tell you. Because of what I teach, again, the way I teach to understand markets and what's going on with markets and whatnot, it's a full understanding of what is going on with the market participants, which means you have to include the wicks. You cannot ignore the wicks, okay? The wicks, for the most part, have more information than what the candle bodies do. And if you're doing a line chart, you're ignoring the wicks. So I'm not a big fan of using wicks like that. I mean, if y'all want to, you can. But I'm going to tell you right now, after 30 years of doing this, I found a lot more consistency by understanding the importance of the information that's actually in the wicks instead of ignoring them. So for me, again, I don't use line charts. I'm not a big fan of them because they ignore so much of the really, really important information if you want to understand how and why markets move the way they do. You have to get a full understanding of what market participants are doing, and you can't do that without the wicks, right? Yeah. As we say, wicks do the damage and bodies tell the story. Yeah, exactly. There is so much information in wicks. So that's why you guys will never see me ever really referring to line charts. It's just leaving out too much information, right? I mean, there's a ton of information when you're understanding the price action and volume analysis within this range here. There's so much to be told about this candle here, which necessarily needs the wick to tell the story. Okay. So in case anybody else was wondering, I know Bamboo knows because he knows me. I know he knows, but for anybody that doesn't really know what I teach or understand how I teach, the wicks are extremely important with it. Let me see here. Michael Johnson says, I've been seeing a lot of value in the demand supply structures that you teach. Yeah. It's absolutely insane when you get that, right? You're like, holy crud. It happens over and over and over and over again, or pretty close to it, right? But anyway, so yeah, so I mean, again, we're looking good still here on things. My initial thought is still that we'll get this move up here toward the all-time high, but we won't get the real breakout until we pull back. I think we're going to have to pull back. We don't have to do anything. I think we will pull back toward this 62,000 area, and then we'll get the big breakout. Okay. Now, what does that mean? Well, again, we have our target here based on the height, which is shy of the all-time high, right? I could see us pushing into an all-time high, and you trap the breakout traders, and then you send it back down, and then everybody that was bearish, who then got convinced to go long the breakouts, right, then went long, and then it goes the other way and comes back down. They're like, oh, crap, see, we told you. We've been telling you for 7 months this was bearish. Look, it was a bull trap. Y'all are suckers. We're going down. We're going down to 20,000, whatever, right? And what happens then is so you access the liquidity up here on the breakout traders, you trap them, send it back down, and then everybody's convinced it's going to go down, and then you get them over here, and you trap all those traders right there, and those getting in, right? And you go back up, and these who were here, who were holding, going, oh, it's just going to bounce and continue lower, they end up getting caught again. So what you're doing is you're grabbing liquidity to send it back down, to then grab liquidity and break it back out. And that becomes your jump across the creek. Most often, that's how it works. It's not an every time thing. There is nothing that happens 100% of the time in trading. Okay? The only guarantee in trading is that you're going to lose money from time to time. And the newer you are, the more money you're going to lose, and the more often you're going to lose it. That is the absolute only guarantee in trading, which is why I tell you guys day in and day out that risk management is the most important thing you do as a trader. And you have to be consistent about it, right? The only thing you control is how much you lose. You don't control what price is going to do, but you control when you get in, when you get out. Okay? Does this make sense, guys? Let me see here. So let me check here. Zuka, what's up, buddy? I see you checking in. Let me see here. So this is, again, nothing's changed. Everything's the same way I've been talking about it since we were coming off here and pulling back, right? So nothing's changed. Everything still, I believe, is still setting up this way. But always open, never completely 100% rigid in our approach, right? To be a good trader, Peter Brand, I think, says it best, right? He says, strong opinions loosely held. What does that mean? That means you have to have a strong opinion in order to get into a trade. But don't be so strong and rigid that you're not willing to change your opinion when the market itself gives you a reason to and tells you that you should be. Stand banging you over the head like a piñata, telling you to pay attention, to wake up and listen, and you don't do it, right? You don't want to be that piñata that the market play with you like that, okay? All right. Let's jump in here and see what else I got here real quick. Save, absolutely banger trade, guys. Listen, if you were in the TWC Traders Club this past 2 weeks, I had been talking about this, right? I had been given reasons why I believe this was likely a bottom, and they came back over here and talking about going long here, right? And so what did we have? So I do these market wrap updates every night, Monday through Friday, in the TWC Traders Club, okay? Now, again, you're going to get access to the TWC Traders Club if you jump on this group coaching. You'll get access to all our group coaching stuff, TWC Traders Club, and Fibonacci threshold theory. He just added that. So you're going to get all three of that if you're jumping on this, okay? So I talked about this trade and being long here and why it was probably going to happen, right? Look what happens. The last time I talked about it was the day before we had this pump. This pump was because Spirit Airlines was given longer time to work on their financial position. What was going on in their finances, right? That's why they got that. Then we had this pop up. This pop up was because there was news that that Frontier Airlines was back in discussions with Spirit to merge again. So this rally up here, I don't have it drawn on here, but my trade looks like this. It looks something about like this here. It was right below the swing low. And so right now, so far, you know, if we look at the top here, been up 23R. Right now, currently sitting at just about 18R. What does that mean? That means I risked 1%. My account, my portfolio, my entire portfolio value is up 18% right now on this one trade over, what has it been? A week? A week. That's it. That's it. And so absolutely banger trade here, right? So now we're looking for, if you missed this trade, we're looking for a pullback to get down here. Right about kind of this $2 area, $2.15 area. You see they got this low volume node here. We're looking for a pullback there for whoever might have missed this run to get the next run up. So if I'm you and you're trading stocks and you're thinking about, well, man, maybe I should jump into save here, right? Look for a pullback down here. Right now is what we're looking at this $2.15 area, initial target. Look for a reason once we get down here on a lower time frame, you know, 1 hour, something like that, 15 minutes, a reason to go long on, you know, have some reason. Don't just catch a falling knife here. But man, oh man, looks pretty good at the moment. It's been an absolute banger of a trade. Really grow there. What'd you say, Andrew? He showed save to help you save on your membership. Oh, man. But absolutely great trade, guys. And there's some potential for this thing to really move up. Based on the structure right now, if we can get this pullback down here toward this level, there's a good chance I might lock in. I might almost double my portfolio on this one account, get about a 90 or a 92R on this trade over time. It ain't happening overnight. But absolutely fantastic. But this is what I teach. This is what I spend a lot of time talking about so that you can learn to understand potential bottoms and tops, right? If any of y'all are following me, you know I call bottoms all the time. Well, I think more than anybody else has over the last few years. Bitcoin, Ethereum, Save here, Square, PayPal. I can't even tell you how many different cryptos and whatnot, right? Sol, Link. So, I mean, you know, this is, if you're willing to put in the time and effort to learn, guys, you're going to learn how to do it as well with what we teach. Okay. This trade was on news. How did you see? Yeah, about the bottom here. It was because of the structure, because of the sentiment, right? Look at this. Look what happened here coming down. We have this extension, right? What's happening here on the daily? We're oversold, right? What's happening? We've almost rallied through the S5 pivot. We've got a big spike of volume. All this was the setup. This move back here, this was the confirmation or the likely confirmation, right? Again, there are no guarantees. But to me, with the stop loss being so close just below lower, because if it broke down lower, there was no reason to continue, you know, this thing could have continued much, much further down. This was the setup here. Well, this leading into this, right? And your volume, price action, all this stuff we teach, all this stuff I teach, okay? But this was the setup. And even with the pivots here, this was the confirmation of a likely bottom here. So I didn't have to know the news was coming up. Now, you can look and you can go, okay, well, usually airlines, when they get to this, you know, talk of bankruptcy, most often they don't actually go through that. They get extended terms on their financing. They get a merger. They get something like that. I mean, so you can also look a little bit at that as well if you want to. But for me personally, it has a lot to do just with the setup here, with the volume, the price action, pivots, you know, the RSI and stochastic RSI, and then of course the sentiment. So it was a big grouping of stuff that I teach that we were able to get this. So yeah, Robert says, don't pay attention to the news. Doesn't matter. I feel the same way. The news always comes into kind of afterward. It gives us something to say, oh, well, that's why it happened. But you guys know, I've done this so many times publicly, especially over the last few years. You should, if you've been watching me, you should be convinced by now that you don't need to watch the news, that you don't need to watch fundamentals, that all you have to do is learn to understand how and why the market moves the way it does through the analysis on the chart, the way that I teach it. Now, does that mean you're going to be 100% correct all the time? No. I'm going to tell you right now, I've been doing this 30 years, guys. I am never 100% correct. I still miss opportunities. I still get things wrong. That's part of trading. We're human beings. But trading isn't about possibilities or guarantees. It's about probabilities. And so we trade in what is most probable at that time. If you've taken my pivots course, just pivots alone, forget the rest of this, you would have thought likely bottom here. I definitely want to try to get in here after the retest. And you would look up here and go, this is likely nearing a top if it's not the top right here. If you've taken my pivots course alone already, you would understand that. Okay? So, yeah. Anyway, so to answer your question, yeah, that's what it's about. It's not one simple thing that happened. There's a lot of things happening here. I'm a big believer in never taking a trade just because there's a chance. What do I mean is, don't get into a trade just because one thing happened. Oversold, hit the pivot, pin bar. Don't ever get into a trade just because of one thing. But when you have multiple things happening in confluence at the same time, at the same area, then your probabilities increase significantly. So now it's not just a possibility with one thing happen. It's a probability with a lot of things happening at one point. And that's what I'm saying right here. And then this coming here, after everything that happened here, it was worth 1%. It was worth taking a chance at 1% of my account there, the way I teach risk management, right? And again, right here, I've made 18 times my risk. If I were to close out right now, I locked in 18 times my risk. What does that mean? That means on $1 million portfolio, I made $180,000. On a $10 million portfolio, I made $1.8 million. Okay? On a $10,000 portfolio, made $1,800. That's what this means. And all I did on a $10,000 portfolio, made $1,800, and I only risked 1%. I only risked $100. Meaning if this trade didn't work out, I would have only lost $100 of my 10,000. But this, so far, the way it's worked out means I could close it out right now, lock in $1,800. Forget about looking for the absolute dollar amount. It is never about a single trade. It's always about your system. When you focus on a single trade, you get all stuck up in how much you're going to make on that trade. You will lose money over time doing that. I'm telling you right now. Focus on your system. Look at your R. Look at how much return against risk you have a chance of making within that trade. Don't worry about the actual number. Okay? Look at how many times return or how many times risk you're going to make if you're correct. Because especially if you're working with a smaller account, your profit may just be, say, $100. And you're like, oh, that isn't enough. I need to make $500, right? And instead of taking a good trade and locking in a good profit and just continuing to repeat that and building that up, you're not going to take trade. You're going to end up losing your money, or you're going to take the trade. You're going to stay in too long. It's going to go against you. You're going to lose your money. And then what? You're screwing yourself. Look at your risk in relation to your return on risk. That's what you're looking at. That's most important, not your actual dollar amount. If you focus on your return on risk in your system rather than your actual dollar amount, you're going to get a lot further, a lot faster. Okay? Let me see here. let me catch you here. Oh, I do set a stop loss. No. I do set a stop loss. That's what this is right here. Right? This is about where my entry was. My stop loss was just below the swing low over here. So there's my 1%, right? And based on that, that's why where we're at right now, it says risk reward ratio 18. That's 18 times. So I'm making 18 times how much I've risked here right now if I were to close it out. So again, based on the way that I teach risk management, the way that I utilize risk management, I'm not going to tell you how big my portfolio is, but if it was $100,000, I made $18,000 risking just $1,000. If my portfolio was only $1,000, I would have risked $10 and made $180 on it. That's how it works. But, you know, every time people are trying to get into trading, they're trying to get rich overnight. They're trying to do it in one trade. And that's why almost everybody that comes in, almost all retail traders that come in are back out of the market. They don't stick around. It's crazy, right? But that's why it is, because they're trying to get rich overnight. They're trying to make it on one trade. The trick, the golden goose of trading is to understand that it's about your system and time. Okay? You want to have a greater average winner than loser. That's the number one goal. Once you get that figured out, then you can work on your strike rate. And I'll tell you what, if you can get 50% or greater, we'll say over 50% of your trades correct, okay? Even 50.1%, okay? And your average winner is greater than your average loser, that is the holy grail of trading. There is no, your equity curve will continue to go up if you do that, okay? But that's how you do it. What the heck just happened there? It just disappeared. Oh, there it is. Look at that. It's back. But anyway, so yeah, so these are the secrets, guys. These are the things that people don't normally tell you, and especially that you're brand new traders who have only been trading crypto for a year or something, and all of a sudden they're out there telling you how great they are. These are the things they won't tell you because they don't understand it, right? 30 years of doing this across just about every market you can trade out there, guys. Futures and energy and precious metals and stocks and crypto and Forex. I'm bringing what I learned, trying to teach you guys just about everything that I know in that group coaching. The cool thing is, Fibaswani, he's added his stuff in there now. I've got about 30 years. He's got, I think, just over 20 years of experience as well. So, just between the two of us, you're already getting 50 plus years of experience in there. And then our head traders are a bit newer, but they've shown that they, taken what they learned with us and they've been able to make it, to apply it and consistently be profitable with it, which is why I pay them to do what they do now. So, a lot of good stuff coming in, but let's jump in here real quick. Tesla was another great trade. I talked about this in our my market wrap for our Traders Club members. I believe I talked about it right here on Tuesday, because Wednesday after hours was when Tesla's earnings were coming out. And I talked about the idea of taking a trade here and, to go long on that, right? So we had a slight dip below to end the day. And then boom, they beat the earnings. They actually whooped up on earnings here. Reported 72, estimate 59.3. Missed revenue a little bit, but man, the market just took it and ran with it. So had you been listening and you got in sometime on Wednesday before they released earnings, well, we won't even go way down here. We'll say right here, price is up like almost 25%. Absolutely insane, guys. So these were just a couple of things that have happened this week in the market wrap alone. Okay, this is in the market wrap alone. There are other things, we've got other trades, we've got other things going on, but just off these two, had you taken advantage of both of those, you'd be pretty damn happy right now. To take this trade right here, your position, you would have made, if you put it here, right below this swing low here, which is what I did, put it right there. And then let's say you got it at almost the high of that Wednesday, right? You're not even getting way back here. You're currently up over 6.5% on your account. So again, if you've got a $10,000 account, you're currently up 6.5%, $650 on this one trade in the second day. So yeah, again, and it's continuing to go here, right? So what am I looking with Tesla? Well, if you've been following me, you know this is my account. You know this is where I'm looking at. I'm looking at potentially a leading diagonal here based on the height of this pullback. Wave 501 target here, right around $346. So again, looking at, ABC, AB, working on C here, potentially getting up there around 346. Okay. Elon made about $34 billion yesterday. Yeah, with this move, right? And today it continues to get better, right? By the way, this Tesla trade that I talked about was completely based on the chart, no fundamentals. I don't pay attention to Tesla fundamentals. I don't care about cars delivered. I don't care about robo-taxi. I don't care about how much Bitcoin they hold. None of that. None of that makes any difference to me in my analysis. This is completely based off the chart. What's going on there? Same thing with Save. Okay, same thing with everything we kind of show here. Let me keep going here. What's going on, Revy? I see you there, buddy. Bitcoin dominance. Man, we continue to go up here. We're up, what is this here? 59.3% so far. Again, if you guys have been following me, then you know since we were way down here, you'll know that we were already looking for a move up through 60+%. Now, I got a lot of hell back here. Matter of fact, I believe I was doing a show. I was a guest on Investing Bros show with Tim. And we had talked at the time about Bitcoin dominance rallying to 60% or greater. Yeah, and we got a lot of hell from that. But here we are. It is what it is. You can get on board and join the train, or you can sit there and keep whining and saying, this is why it can't happen. This is why it shouldn't happen. Chart says it should, right? So, let me see here. So that gets us right there. MicroStrategy. Everybody's surprised about MicroStrategy. Why? If you guys are following me here, I pointed out this triangle. There, based on the height of the triangle here, we got a target of 301 or so. Just based on the height of the triangle here. Now, it doesn't have to go there, but we knew with this likely being a triangle that it was going to break out to a new all-time high and go on. Everybody's all surprised. No surprise over here, right? So we'll see if we can continue to get this push up a bit higher here toward that 301 area with MicroStrategy. We are getting a little long in the tooth here. You can see that we are running through the R5 pivot here on the weekly. But we'll see if we can grab that. And then if we can, we'll look for a pullback into this low volume node area here, around $100. Let me see. Actually, you know what? If this is just going to be a 1 and not a 5, we would actually look for a pullback here toward the top of the triangle here, right around 185, potentially a 160, 151. But initial target would be at 185 from this area up here. If this was to be 5 waves fully done, though, again, we'd look for that move back. See, I don't see this coming back down into the high volume nodes. It should hang around the low volume node here, which means we should be looking for it higher up. Now, this is an initial wave 3 target based off the height, of 1 and 2 here. But that's initial. It's the 1618 extension. It'll probably overextend higher. And so, especially if we get a 1 and a 2 here, we'll get a 3, 4, 5 up higher, pull back. But nonetheless, right here, looking for this to try and push its way up there toward that 301 still. Looking at that. Gold. Let's do gold and silver here real quick. Gold, it hit our initial target here. And of course, as we were getting near that, I said it looked like 1, 2, we were doing a 3 and a 4, which would give us a 5 up here, probably around 27.92. So right now, looking for that, if we can get that breakout higher, looking for that target area to give us this wave circle 3. Then we'll get a pullback, and then we'll get 5 still up, okay? So wave 3, almost complete, I believe. We'll get a wave 4 pullback, and then we'll get a wave 5 higher up. That's how you have gold too as well, Andrew? Of course, you learn from the best, man. You learn from me. Just kidding. Let me see here. Silver. Everybody wigging out about silver, right? But why? I mean, all we did was break out of this previous resistance that we've had here since May of 20. That was what we did here on gold here, right? That was this breakout here from 20, right? It just did it right here. See how it went and broke out? Boom, and it kept up. We're getting that breakout here now, finally, on silver, right? Shouldn't be a surprise. I've been talking about silver breaking out above 50 for a while now. So I believe we'll continue looking there. Right now, I think we've probably got a 1, 2, a 3, and a 4. So if we can get this to start rallying back up here, based on how this pullback, we should get a wave 5 of 3 target around $36.30. So just looking to get that move up. We've kind of filled in this wick here, low volume node. So now we see if we can get that one more push higher. And then if we can, wave 4 would probably be looking at about, yeah, right back here, right into this fair value gap, right around 32.5, right at the bottom of the low volume node, right here at the previous resistance as support. I mean, all the reasons in the world, like confluence of factors for why, you know, this area would be a good wave 4 target. And it's our initial target of 38.2% retracement. Okay. Yeah, Andrew says, Andrew was talking about this is one of the reasons why Andrew is one of our head traders, guys. He was talking about silver, which is what you call it? Oh my God, with the stock market. Sorry, my brain stopped here. But anyway, yeah. So earlier this year, he was talking about it rallying up to $40, and here we are getting close. So definitely doing well there, right? So yeah, so we'll see if we, you know, if we're done here, if we pull a little further back, but ultimately looking to see if we can get this rally back up here toward that 36.30 area on silver. DXY, the dollar that won't quit, right, against the other currencies here. Pulled back to this ascending support, trying to bounce up higher. We've hit this weekly supply structure here, coming near the descending resistance. We could still see it rallying up here to 104.87. If we're, you know, that's kind of like the next higher up target I'd be looking for. But if we can get an impulsive breakdown and close below this local ascending support, that'll hint that that top may be in. And then it'll be next week. So we'll want to see, you know, the daily pivot here will move up next week. And we'll probably say an impulsive breakdown and close below it will signal that that top's in and it's headed down lower once more. Right now, I've got this count kind of like locally here. This is either a 1, 2, or it's an A, B, and then we got C working. But looking at an, you know, 1, 2, 3, 4, looking at a diagonal here as a 5 for the first big wave on the move down. So you get like a 5, which would give us a 1, and then we get a 2, head down further, okay? Could we range our weekly on DXY as a possible accumulation range? Well, we'd be looking at what? This here, up here. What I don't like about this potential accumulation range is that you're getting larger and larger candle spreads as you're coming down, and you're getting volume expansion. So candle spread expansion and volume expansion, which is usually indicative of a trend, which we got here. We had a great weekly candle right here. But again, we'll have to look with what was on here because, you know, you'd be looking at your selling climax here, automatic rally, secondary test, and you got this move down. We'd have to see what happens in this area here. I'm not convinced that this would be accumulation here. Right there. So really kind of seeing what goes on here, and do we get this continuing down here? No, you mean, oh, are you talking about this range right here? Just totally skipping this? No, I think because these two areas get so close to this swing low, you'd have to look at this whole range here. rather than just this right here, right? So yeah. So again, I'm not overly excited about the price action within this range here at this point to be like, oh yeah, that definitely looks like accumulation. Which is why I want to kind of watch what happens here now and what we get there. Okay. But again, I do believe because we've got this so low here, almost to the swing low here, that you're going to have to look at this whole range rather than like a V move and then it right here. But again, on this move down, we don't usually, when we're coming down in an accumulation or reaccumulation range with our last point of support or our spring, we usually don't want to see expansion of volume and candle spread because that's telling us that the market's trying to push it down. And we don't want the market to be trying to push it down when we're looking at that. But it's just one of the things we look at. So yeah. Let me see here. Look at this, guys. Look at the NASDAQ gapping up, popping out locally. We've been looking at the R1 pivot as a target. Right up there around 20,754 to give us a new all-time high because we already have a new all-time high here with the S&P, new all-time high here, obviously, with the Dow Jones. Tech is doing well today. How do I know tech is doing well? Because NASDAQ's leading. NASDAQ is very, very tech-heavy. Dow Jones is broad-based across all the different sectors. S&P, the SPY, is in the middle. It's still got a lot of tech in it, but it's got more broad-based exposure than what we have here with the NASDAQ. So again, I don't think we're anywhere near being done. As you can see, we got this pullback, stochastic RSI almost bottomed out and oversold. I think next week is a rally week overall for the indexes here. If you've been following me with the Dow since below 30,000, you'll know I said we're probably going to get 50,000 before we had a recession or something like that. So far, we've hit, 43,000 and almost 200 up here, heading up toward that 50,000 area. So I still think we're probably headed toward 50,000, guys. RSI here, printing this hidden bullish divergence right here, where we got higher lows in price. We got lower lows in our oscillator here. Like I said, as stochastic RSI is bottoming out and oversold, I believe we get our rally next week and we continue up. So we should still be looking higher for longer, guys, on that, okay? So, I mean, if you're very bearish and you think it's the end of the world and all this, I don't know what to tell you, okay? Nathan says, I'm assuming that the rally is a Trump speculation win. Why? It's been rallying a lot longer than he's been speculated to win, right? I mean, if we're honest, right? I know that's what a lot of people are saying, but here's the chart. Right? I mean, it's part of the overall structure, right? Here we are again. It's well before, the speculation he's going to win, that they got going on here, right? The Trump trade. So I wouldn't say it's that at all. I would say it's just continuation of what we're doing here. People are more risk on, or are getting more and more risk on. I think, matter of fact, I believe hedge funds are now buying stocks at their highest pace this entire year. And I don't think it has to do with Trump. So, but again, I don't worry about narratives, right? I don't worry about fundamentals. I don't worry about news, events, whatever, because at the end of the day, right? At the end of the day, here's the thing that I want you guys to understand is at the end of the day, we're human beings and price action and news happen all day, every day, right? But we only put it together when it suits us, right? As human beings. And so that's why I don't, tend to worry about that a whole lot. I look at the charts and, again, with the things we teach, we look at, potential forecasting, where we think price is going to go based on things that happen, right? Because why? Because at the end of the day, it is the social mood that really determines what's going on in the markets. And what do I mean? It's how do people in the aggregate feel? And we know how they feel in the aggregate because the fastest way we know how they feel is the markets, right? It's the quickest, fastest way to know how you, your neighbor, myself, everybody else feels, because we can jump online and put a trade in like that, right? So it stands to reason that if we're going, right, if we're feeling positive, about things, enough so that we're willing to risk by putting money into the markets, that's what we're going to do, right? And if we're really worried about what's going on with the economy and whatever else, then we're likely not going to take that risk and put it into the markets, right? And so that's just a real quick watered down version of the way we start looking at it. But when we do that and we understand that the market leads, right, and all news and everything else is lagging, then we can kind of go, okay, well, we expect, a reversal around this point. And then some news event will happen. Go, oh, look, it dropped because this happened. Well, okay, maybe. But we figured this out weeks ago that it was probably going to get to this area and pull back because of the way that people are. People move back and forth from their midline, excited, depressive, but always back to the midline, even though the midline shifts a little bit. Okay? You're not annoying, man. Nathan, not annoying at all, buddy. Glad to hear from you, man. So anyway, guys, this is kind of where we're looking at. So again, going back to Bitcoin here, looking to see if we can get this potential triangle finished out here. It's looking pretty good at the moment. We want to see it pulling down at least to the hourly pivot here around 66.950, 960 or so at least. But basically what we need is wave C to terminate above wave A, anywhere above it. Wave D to terminate anywhere below wave B. And then wave E to terminate anywhere above wave C, wherever that terminates. We're going to assume the wave C is going to target this hourly pivot area here. But it could dip down a little bit further. And then wave D, and then wave E, and then kind of break out there, okay? There we go, guys. So that's what I'm looking at. I'm about to go jump on with Mr. Gary Cardone. So jump on over there if you like. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. Thank you all so much for joining in, as always, listening to me. Hopefully, I've given you something to think about. I don't expect you necessarily to believe what I say right off. And I'm not always correct. But after 30 years, there's some things I've kind of figured out along the way. And that's what I try and help you guys with. So if you haven't yet, jump on over to texaswestcapital.com/97 and then the letters GC. Get signed up on that wait list. A little bit later today, I'm going to send out emails. People get in on that $77 a month. And remember, you can keep that founding member rate for as long as you want, as long as you keep renewing, right? When you stop renewing, though, don't come back in later and say, oh, well, so-and-so happened or whatever. You got to make sure that everything's good so that you can renew on that and keep that price, okay? Again, you'll also get the option to do a year up in advance if you want, and that'll get you 2 free months. So absolutely crazy. Not just $77 a month, but then you're only paying for 10 months for 12 months in the year. You get everything we talked about. We'd love to have you there, guys. But listen, if you're not serious about it, don't join in because at the end of the day, it'll just be a waste of money for you, okay? I can't do the work for you. All I can do is what I do, which is I say, listen, this is what I've learned. This is how you do it. Please have questions. Ask me questions. I like questions. That's what you're there to do, right? If you're not asking questions, then you're probably not learning anything. If you put in the time and effort, I'm willing to bend over backwards to help you. But, again, we do have people who join who don't put in much effort, unfortunately, and it's just a waste of money, guys. Things are too expensive today to waste your money, right? But if you are serious and you really want to learn something that has the potential to really change your life, it changed mine. It's currently changing some of our members here, as you've already seen, okay? And so you can join in that as well. We'd love to have you there. Do I accept IOUs? Oh, if only the world worked on IOUs, right? Is that on X with Gary? Yeah. You can see it on X, or again, you can go to youtube.com/Gary Cardone to jump in there. As always, remember, the only thing you control is how much you lose. So if you've learned anything, if you take anything from this, okay, let it be that more than anything else, learn proper risk management and work on it again and again and again. I've been doing it for 30 years. I still work on it today because it's the only thing I control. So every little percentage better I can do it, then exponentially the greater my returns are going to be over time. Does that make sense? All right, guys. Hey, listen, I appreciate you showing up as always. Have a great weekend. Trade safe. And man, oh man, I'll be seeing you guys next week. All right. Take care.